Hello, everybody. I'd like to share something with you guys about some moves I've made and where I'm valuing Tenet these days. It's been a little quiet out there. We did get a news release a couple weeks ago, and mostly right now I'm just looking forward to seeing those Q2 financials at the end of the month. But as of today, Tenet Fintech is trading about $1.24, which puts us, around a one times price of sales. Yahoo Finance has it at 0.79, with current shares outstanding of 98 million, however, and $1.24 share price. That puts us at 122 million market cap. So, we're right around that one times. Price to book, they got a 0.82, enterprise valued revenue 0.85. So incredibly low valuation right now on the company. It did have me looking at their warrants, and these have been trading down pretty low. I see that there was a few trades earlier last week. Somebody looks like they were buying shares around the 7-8 cent mark. Definitely around this 10 cent did get me interested, as I feel they are a pretty good risk to reward. Obviously, there's some outsized risk in the form of expiration on these, because if you do decide to buy the warrants, these are going to expire next July, so keep that in mind. I did do something that I haven't done in a long time. Also, stick around for the rest of this video. I'm going to share a DCF model that I've got on Tenet and just kind of where I value it. But I did make a purchase on these warrants today, something that I haven't bought shares or warrants in a very, very long time. I've just been kind of holding on to what I got. But I was just thinking about it, look at some of the other companies I had. So I did make some moves. I increased my total share count of my warrants by about 50% today. So I like the share. I like the warrant price, 14 cents. I think there's a good chance we could see an upsized return here, just with the amount of time that we have left till expiry. We've got Q2, Q3, year-end financials all before these expire. So I think there's just a lot more good things coming down the pipe. When the Canadian Business Hub launches and investors get to see that, I think we'll get to some positive momentum, and then that's when you're going to start to see these things really fly. As soon as we get any kind of positive momentum behind the stock and the share price starts going up instead of down, we're going to have some outsized returns here. So that's kind of my little bet. Obviously not financial advice, but I like them anyways. So I went ahead and input the numbers from the PowerPoint presentation that Tenet put out. So they did give us guidance in Q1. Right now they're guiding for about 210 million revenue this year with extremely small EBITDA numbers. I'm hoping to see actually much better EBITDA numbers than this. I think that it's possible they could have shot low with these. With the lockdowns in China for 2 months, I'm not sure what to think for overall revenue. But as far as adjusted EBITDA goes, I'm hoping for some good things and maybe even positive net income for, if not for the year, maybe even a quarter or two. So, but I took these numbers, 22, 23, 24, and I put them into a spreadsheet here that I made up in Q1. So I've had this for a little while, and I play around with it once in a while just to see how the numbers come out. But basically, it's a pretty simple discounted cash flow model. I used 12% cost of capital, pretty hefty discount rate of 65% in the end. I use a couple terminal values. So one's EBITDA exit, is if like Tenet was going to sell at the end of this time frame, and then what a company would possibly pay for them at like a 4 times multiple, and then also at growth rate perpetuity, which is a little bit more academic, and then I kind of blend the two rates to get a terminal cash flow. I do run it out to 2027. So in my mind, this is kind of 5 years. So 2023 to 2027 is where I'm kind of using that from. I did put in 2022 numbers here. And then as far as growth forecast goes, they basically have these growth forecasts built in using their numbers. And then I just decrease it each year. So going from 60% to 45% to 30%. but then having EBITDA increase also proportionally to revenues as well to get these cash flows. So anyways, yeah, at a current price of $1.25, it gives us a market cap of 125 million as of today. So there's a few things that I kind of worked into this, but the DCF basically is giving me a current value of share of $4 a share. So that's if everything was to work out as it is here, they get those future cash flows, and then it's discounted correctly. So it's just kind of a metric to show what theoretically Tenet could be worth if somebody was to institutionalize, were to build a discounted cash flow model, right? And you can change these numbers around, and you can get anywhere from $2 to $10 pretty easily, just with minor adjustments. But I think as long as the company can continue to meet their guidance, this is probably pretty reasonable, having a 12% cost of capital and a discount rate of 65%, giving us an annual RRI over the time frame of 54%. So that's basically 54% gain year over year, for a total return over 6 years of 1,300%. So this would give an approximate share price of $54 at the end of 2027. I think this is a bit conservative. If you work it back to price to sales, that's a 5x price to sales for a company that's growing at 30% per year, with much better margins, is only still a 5 times price to sale. For instance, a company like Microsoft that has about 40% operating margins and 20% growth rate right now, slightly less I believe, they're still getting like a 10x price to sales. So this is pretty conservative. So this is just based off of a price to free cash flow multiples that I put in here, 50, 40, 30. So basically decreasing year over year to give a share price approximation from price to free cash flow, right? So it gives a varying range of all sorts of numbers that you can put in here to kind of give you like an idea. But at the end of the day, all this is kind of academic, and it doesn't really matter unless you don't think the company is going to grow. If you think the company is going to grow, you think they're going to be pretty close to their guidance, and then they're going to continue to growth in the future. There's all sorts of possibilities that we could be looking at here in the future, right? Which is why I continue to hold my shares. I think they can. Right now, I'd say the market's probably pricing Tenet at a company that's possibly positioned to fail. It's almost like they're not anticipating Tenet to even come out in the next year or two at the current price, right? So I think any kind of good news at this point is going to start to turn things around, and these Q2s, followed by the financing that they have upcoming, and then the potential uplists onto the TSX, I think are all positive catalysts that could send us quickly in the right direction, which is another reason why I decided to increase my position in the warrants today. So just a lot of good news on the horizon. We are in August now, so the time frame's ticking down, and these things are still pretty dirt cheap. So basically dollar cost averaging into those. If we get closer and closer to the end of the month and those can remain cheap, I'll probably dollar cost average in a little bit more. But just kind of going in slow, and you never know, you might get these things for even 5 cents and stuff over the next few weeks while we kind of wait for everything. So anyways, that's where my thoughts are with Tenet, kind of a share price valuation. But I don't think it's unreasonable that we could start to see like a 5x price of sales and start looking at getting back to that 500 million market cap, as they start to come out with better numbers, better gross margins, increasing that, and so forth and so on, right? And we might even see some of these theoretical share prices a lot sooner than these target dates, right? So anyways, if you enjoyed this video, please like and subscribe. Appreciate you guys taking the time to watch it, and have a good night.